This is not financial advice. I'm recording my thoughts about Zillow stock. It's currently trading at about $39 with a market cap of about $9.4 billion. In this video, I'm going to talk about Zillow's business model, its financials, and finally, I'll do a valuation. Previously, I've done two videos on stocks that could double. One of them is Zscaler. I did the video at about $115 stock price and it went to $250 and it's currently at $170. So it did quite well. The second one is Arista Networks. I've done a video when it was at about $160. It did go to $320. So let's see if Zillow can cross $100 to double from the current price of $40. Let's start with Zillow's business model. If you live in the United States, you would have dealt with Zillow already. As you can see on the screen, Zillow is trying to get a housing super app. As we all know, purchasing a home is a complex process. There is involvement of a landlord, buyers and sellers agents, there's a loan officer, and then a closing officer. And Zillow is already in the rental business as well. Zillow's housing super app includes rentals. Zillow also have a lot of brands. They have made a number of acquisitions. The more important ones, in my opinion, are Showing Time Plus and Follow Up Boss. Looking into the average daily active app users, Zillow is at 62% share, and number 2 is 17%, Realtor.com, and they're nowhere near Zillow's group. So the challenge with Zillow is that they have to monetize this lead in average daily active app users. Let's look at Zillow's revenue split. As you can see on the screen, 48% of their revenue comes from the buy side. I will talk about the NAR lawsuit effects in a moment, which will affect this revenue segment. 12% come from the sell side, 13% from other residential, 20% from rentals, and there is 5% from mortgage. Recently, there is fear that Zillow's 48% buyer side revenue is under threat because of this lawsuit. I have about 4 bullet points that I want to show. I don't want to go into too much detail, but you could give me your feedback in the comments. So the effect of NAR lawsuit includes that sellers cannot list the buyer's commission on MLS listings, but they can still list it on their website, and there are a lot of other locations where they can list it, right? And then I definitely think that the buyer's agent commission will go down. Currently, it's averaging at about 3%, right? But it will get to 1 to 2% instead of the 3%. For new construction, buyer's agent even currently does not have much to do because it's a new construction, the house is already there. The buyer's agent will not spend a lot of time showing multiple houses to the buyer, right? So the buyer already knows this. So what the buyer does is, out of the 3% commission that the buyer's agent get, the buyer will take 2 or 2.5%, and the buyer's agent will only get 0.5 to 1%, right? So that's already happening. It's not like the buyer's agent is getting 3% for the new construction. And even before the judgment, a lot of buyer's agent return 1 to 2% back to the buyer. So in reality, most buyer's agent already make 1 to 1.5%. Of course, there are exceptions to this. There are certain places where the buyer's agent make the full 3% depending on their effort. But my point is, the buyer's agent should still spend $500 to $1,000 a month to get those leads. And this NAR lawsuit is not stopping the seller from offering this buyer's agent commission through the seller's agent, right? So these are my thoughts. Of course, you need to know a lot about America's home buying process. Otherwise, you will not understand a lot of things. But my opinion is the NAR lawsuit will have impact on Zillow's 48% buy-side revenue, but it will not be too significant that we need to worry. The other side, the sell side, mortgages and rentals, can easily offset once there is a real estate boom in the coming years, once the interest rates go down. Let's look at Zillow's financials now. As you can see on the screen, the market cap is about $9 billion and the trailing 12-month revenue is $2 billion. So that's a price to sales of under 5. In general, for software companies, it's cheap, but Zillow operates in a cyclical industry, which is real estate, right? So we cannot really judge whether that is cheap or expensive. The net income for the past 12 months is about negative $159 million. I'll discuss more on that. So this company is still not profitable. Let's look at the most recent income statement to get an idea of their revenue split and margins. As you can see on the screen, in the most recent quarter, the total revenue was about $529 million. That's up about 13% from the past year. And as you can see, the residential revenue was about $393 million, and that only grew 9%. And rentals is more promising than residential. As you can see, that grew 31% year over year. So Zillow is growing much faster in the rental segment than the residential segment. And there is mortgages. It's barely any income there, $31 million. When compared to the total revenue of $529 million, it's not even 6%, right? So for the purpose of the valuation, I'm only going to consider the residential and the rentals. I'm not going to consider mortgages and other because they're not contributing too much. Now let's look at the margin profile. As you can see, the gross profit is 77%. Because Zillow is mostly a software business as opposed to Redfin. If you look into Redfin, which is a competitor of Zillow, its margins are less than 30%. The main reason is because they also employ the agents and they make money when they convert the lead into a purchase. But Zillow is not like that. They don't employ the real estate agents. They partner with them, but they do not pay them, right? They do not pay them salary. So that's the reason for very high gross profit. And let's look at the balance sheet. They have close to $3 billion of cash equivalents, and short-term investments. And the debt is about $1.7 billion, but most of it is convertible notes long-term. They're not forced to pay it back anytime soon. So we can give credit to the $3 billion of cash pile that they have. And looking into the net income of minus $157 million in the past 12 months, of course, that will not convert into a cash burn because there's stock-based compensation that gets added back to it. So my point is there's no risk of bankruptcy for Zillow anytime soon because they have a lot of cash and they're not losing so much money. So I think the balance sheet is in a pristine condition. Before I move on to the valuation, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Zillow. Now let's start with the valuation. As you can see on the screen, I'm separating the residential with rentals because they are growing at a much different pace. Therefore, they deserve different multiples. So in 2023, the total revenue is about $2 billion, right? So $1.4 billion is coming from the residential and $0.4 billion is coming from the rentals. With respect to the growth rate, I considered 15% for the residential. In the most recent quarter, they only grew about 9%, right? And that growth is in an unprecedented downturn because the interest rates are too high. But once the interest rates come down, it's going to accelerate. That's why I put 15% over here. I think it's going to grow faster than 15%, but I'm taking average growth rate as 15% for the next 5 years, with which they'll have close to $2.5 billion of revenue in 2028. The gross margins are 77%, right? So I can estimate a net profit margin of 27.5%, with which they can make close to $700 million of net income in 2028. This business will deserve a much higher multiple because it's a leader in what it does. But I'm still considering a conservative multiple of 25 because the growth rate isn't too great. So with that, the market cap in 2028 would be about $16.8 billion. Currently, they have close to 232 million outstanding shares. And I'm assuming that there's no dilution. Remember that they have a lot of cash and they're not losing too much money. So there's no need to do a dilution. And they're also purchasing the stock back. Whatever stock-based compensation they give, most of that is being bought back by Zillow. So because of that, I'm estimating that there will be no dilution. I'm also not giving credit to that cash, by the way, right? So with $16.83 billion of market cap and 232 million outstanding shares, I get a stock price of $73 just for the residential. Now let's look at the rentals. For the rentals, in the most recent quarter, the growth rate is 30% plus, right? And Zillow is betting big on rentals. And with their very high daily active unique users, they have a lot of opportunity to convert most of those site visitors into a transaction. And therefore, I'm still assuming 20% growth rate year over year. As they get bigger, the revenue growth rate will have to slow down, right? That's why the average growth rate is 20%, with which they will make about $1 billion of revenue in 2028 with rentals. And I'm estimating the same margin because their gross margin is very similar between residential and rentals. With that, they will have $270 million of net income in 2028. I'm applying a multiple of 30 because the growth rate is higher here. With that, they will have $8.21 billion of market cap just for the rentals. And that converts to a $35 stock price. So when I combine the residential and rentals together, it comes down to $108 in 2028. Currently, they are at $40, right? So that's a comfortable double in 5 years. In full disclosure, I do own Zillow, about 40 shares currently, and 40 or 50, I think, yeah, with an average price of about $46, and I plan to make it about $5,000 position, which would be about 5% of my portfolio. So this is the reasonable assumptions case, and in the great execution case, I've given a higher multiple and slightly higher growth for the rentals, and I'm estimating $151. So in my opinion, the actual price would be in between $100 and $151. So that's what I'm estimating. So I'm very confident that Zillow can get to a double in the next 5 years. Let me know your thoughts in the comments. Thank you so much for watching.